Wish stock dropped about 7% and stayed almost static without recovering or dropping even more for the rest of the day. The question is, what happened and what are my thoughts on this? Also, the stock went up today 50%. It's 3:44 p.m. and I'm editing the video to post it, so I will talk about that later on the video as well. Hello everyone, welcome back to the channel. If you're new to my channel, please consider subscribing and smashing that like button and joining the completely free Discord group chat, which the link for that is down in the description below. Now, in today's video, we will talk about what happened yesterday, my thoughts on it, and we'll also show a bullish statement from an investment company from Miami. First of all, that drop happened because of these two articles from the Motley that came out over the weekend and the stock reacted to it on Monday. The first one compares Wish with Amazon and which one is a better investment right now. In summary, they talk about how different their businesses are, how Wish is a discount third-party marketplace while Amazon is a retail business that includes first-party, third-party, and brick-and-mortar stores. They explain that most of Wish merchants are from China, which makes it harder to receive and return orders faster. Also explain the growth in Wish is not that high in comparison to Amazon, as it grew 34% in 2020 and Amazon grew 38% in 2020. Also explain how Wish losses are widening and its troubling dependence of Chinese merchants leaves it exposed to the trade war, tariffs, and stiffer penalties in the US. Which same thing happens with Alibaba in my opinion, but Wish is also improving it in that as their merchants from the US, Europe, and other countries have been increasing a lot lately, but I'm gonna show you that later on the video. Then the second article is about if Wish is a stock to buy right now or not and why. In this article, they explain once again almost the same thing as the last article, what Wish is, how they started their growth in 2019 and 2020, how the other e-commerce companies grew at much faster rates throughout the pandemic. They did explain that Wish revenue grew massively 75% for Q1 2021, but that analysts are expecting a growth of only 24% for 2021. Then explained that the biggest problems with Wish were that, again, most of their merchants are located in China, which brings constant complaints about missing items or long wait times for orders and returns, which same happened with Chinese companies like Alibaba. Then they say that Wish relies on discount and flash sales to generate volume, and that is what makes them not be profitable, but they are not seeing that Wish is starting to target higher income people, but we will talk about that later in the video. Mainly, they said that Amazon, Shopify, and Etsy are better than Wish, since Wish wants to replicate Pinduoduo's business, but the growth is lower. In summary, they don't like the company, but it's okay. Not everyone used to like Apple or Tesla at the moment when they started. I'm not saying that Wish will be like any of these companies, which we never know, but I'm saying that these bearish statements will appear every time with many different stocks. Now, after that bearish statement, let's check a bullish statement from the investment company I talked about called Adriana Company from Miami. We do have to keep in mind that according to this company, and I think it is completely true, this opportunity is driven by the investment community simply not being the consumer of the product given the demographic differences. It is a gap between who they serve and who is analyzing the asset that potentially offers incredible opportunity. In this article, they talk about why they like the company, what are the problems that the company currently has. This is a 35 pages research or statement published by Adriana Company, which I would really recommend any of you go and check it out and read it because it is really interesting. But well, they start talking about their management team and the excellent work they do. They also said that when we think about Wish, we think about a low cost or cheap products from China, but the truth is that they are actually improving even more to be way more than that. In this research, they compare it with different companies. First with Fiverr, as Fiverr used to be a low cost and gimmick platform, but that with time they have evolved and pushed its way up market, just like what Wish wants to do, because if you watch my last video on Wish reacting to the CEO, he said that they want to go upstream and target different kind of people as well. Then they compare it with Five Below, as both companies have to have that discovery aspect in which you don't go to Five Below or go into Wish to find something in specific, but you just go to have kind of fun or get distracted and see what you can find. With time, you discover a product you didn't know it existed and buy it. Then they compare it with Instagram, as they treat Wish as a social media kind of app as well, in which their customers spend about 9 minutes per day and see about 500 products a day. Also, because Wish has an algorithm that learns about the customer's performance, what they like and what they don't like, or just what they ignored. So with time, the algorithm will show the customer just the products that they might be interested in, as Wish relies in machine learnings to drive recommendations, and they have a way different data set than traditional e-commerce platforms, which also will help them be able to show higher prices items to specific users, which tend to have a higher spending power than others according to what the database says. As Wish CEO said, Wish was the most downloaded shopping app in between 2017 and 2019. In my last video, I showed how Wish was the third on 2020, but that was only in the US. It was once again the most downloaded shopping app as well in 2020, which is huge because 90% of their sales come from their app and not from their website. So their app being the number one worldwide means that more and more people are buying throughout their app, which means that the growth for the company is continuing. On their app, Avery talked about their performance on the App Store. On iOS has 2 million reviews and 4.7 stars, and on Android has 12 million reviews and 4.6 stars. It is impressive the difference as well between the iOS users and Android users, and it impresses me because statistics has shown that iOS users tend to have more spending power, which is why it makes sense that on Android, the Wish app has 6 times more than what they have on the iOS App Store. Still, they have great rating in both softwares. Later on the article, they show the difference between Wish and other e-commerce and shopping sites. For example, they said that eBay, Amazon, and Walmart are mass retail, as people go to their stores with specific intent. For example, with Walmart, it is normally a grocery, and Amazon and eBay a specific item that they need to buy online. Then Etsy and local farmers markets, it's a niche and handmade goods. Wish, Alibaba, TJ Maxx, Simons, and Dollar General are valuable and discover stores, as people go to those stores to look around and find something they might like. And lastly, luxury, which is a whole other level. Now, remember the Motley full article where they said that their merchants were all from China and that is no good for the company? Well, the merchants base is rapidly diversifying from China into the US, Latin America, and Europe. 5 of the top 10 sellers are now from the US, and combined, these 3 regions have seen a 365% growth in merchants, which I think it is huge because that will help Wish improve their quality and deliver time for those countries for those merchants, and will also help Wish not be dependent on a single region, which could be hardly affected by any US regulation or Chinese regulation. According to them, 44% of US consumers and 85% of European consumers have a household income of less than $75,000. And then we have countries in Latin America, Africa, and Middle East where the average household income is approximately $18,000, which is why for that market affordability is key. They created a chart explaining that the average income of buyers per places. In here we can see that Wish targets or Wish customers tend to have the lowest average income, which is why they have a lot of volume, but their average spending per customer is really low. I do think that with time they will improve as they want to move upstream and will start targeting higher income people, as they have noticed that higher ticket product could increase their profitability. Something that Wish has improved and is way different than other e-commerce like Amazon is their capex spending. Since 2010, Amazon spent $10 billion on cumulative capex to expand its logistic network and infrastructure, while Wish can expand virtually with no cost, with similar benefits to scale just by connecting logistics rather than owning the logistics because of Wish locals, which is a great benefit for them. And according to Avery and Company, it is an underappreciated asset and it's an additional mode of fulfillment. In summary, Wish is a well-managed, great valuation with $1.8 billion in cash, $0 in debt, limited capital spend requirements to be able to expand. They are into a high growth industry that is expected to grow 18% compounded over the next 5 years, has been the most downloaded shopping app worldwide since 2017, and even though they do need to improve several things such as fake items or fake sellers or delivery speed, I do think that this is a nice opportunity at the moment. Again, this is a very volatile stock with a high risk, high reward ratio. The stock went down yesterday 7% and today is up almost 6%. Whoa, it's actually up 50% today because of Wall Street bets. This is incredible. I was not expecting this at all, but according to Seeking Alpha, Wish stock surges after renewed Wall Street bets attention. That discussion says context logic as a potential short squeeze. Short interest fell from a high of 57% in early May to 12% this week, according to market data via Bloomberg. I think that's huge. I don't know if I like it or not. Obviously, I like it because I'm making money, but I don't know if I like the stock going up that much in a single day. That's huge, and I did not expect this at all, obviously. That fluctuates a lot and even more with this kind of bearish statements from writers like the Motley Fool. As a long-term investor, I believe in the company and expect them to improve way more and faster in the coming years and could see a nice return from the company. Again, I'm no financial advisor, so you should not invest in this company just because I'm investing it or because I posted this video. Hope you enjoyed the research. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.